Now that we've prepared the production cost budgets, let's prepare the selling and administrative expense budgets. Recall that sales commissions are expected to be 10% of sales and delivery expense is expected to be 1% of sales. So the variable selling and administrative expense is 11% of sales. The expected out-of-pocket fixed selling and administrative costs are $20,000 per month. In addition, the company expects to record $2,000 of depreciation on selling and administrative equipment and facilities. For the month of January, the variable selling and administrative expense will be 11% of our sales, which were $200,000 from our sales budget, so $22,000. The fixed out-of-pocket selling and administrative costs are $20,000, and in addition, we'll have depreciation expense on selling and administrative facilities of $2,000. Total selling and administrative expense then is $44,000. To determine the cash paid for these expenses, we will need to deduct the depreciation expense of $2,000, and we get cash disbursements for selling and administrative expense of $42,000. Now note that depreciation is added to get the total expense, but it is not included in the amount given. So that's why we do need to add it in, unlike with the overhead where it was already included in the $15,600 of fixed overhead cost. So looking at this budget, what you need to realize is that the $44,000 total selling and administrative expense will go to the income statement, and the cash disbursements will ultimately go on the balance sheet and affect the cash budget. At this point, we've prepared all the budgets that are needed to prepare an income statement, so we'll stop and do that. Recall that the company does use absorption costing. Therefore, the income statement format is the traditional format. This is where we pull together many of the other budgets. Sales, $200,000. That's from the sales budget. You can refer back to that. Cost of goods sold, we're going to sell 10,000 units given in the problem, and we computed the cost per unit to be $10 if you referred to the production cost per unit calculation for the ending finished goods budget. Cost of goods sold is $100,000. That leaves a $100,000 gross margin. Operating expenses are $44,000. This will be from the selling and administrative expense budget, and note that it is the total amount incurred, including depreciation. Net operating income is budgeted to be $56,000 for the month of January. So your operating budgets lead to a budgeted income statement. But stay tuned. Next up, we'll prepare the budgets that lead to a budgeted balance sheet.